how to fund your retirement? If so, you're definitely not alone. This is a challenge a lot of retirees are facing right now.
Are you prepared for the financial twists and turns that come with retirement? One pressing question that often comes up for homeowners is, what will happen to my reverse mortgage when I pass away or decide to sell my home? Retirement planning is about more than just enjoying your golden years. It's about ensuring financial security for you and your loved ones. If you've been considering a reverse mortgage, you're likely wondering how it fits into your long-term plans. Let's watch what happens to a reverse mortgage under different circumstances and how you can make informed decisions to safeguard your legacy and peace of mind. What is a reverse mortgage and why does it matter? What makes a reverse mortgage such a popular option among retirees? Imagine this. After decades of hard work, you've built substantial equity in your home. Now you have the chance to access that equity tax-free, all while continuing to live in the house you cherish. It's like unlocking a hidden treasure chest without having to part with your most valuable possession. But what happens when life takes its inevitable turns? Whether it's moving to long-term care, deciding to sell your home, or passing away? These are the questions every homeowner must consider. Understanding reverse mortgages is the first step in making informed decisions. In Canada, this financial tool is available to homeowners aged 55 and above. It allows you to borrow against the value of your home without the obligation of monthly payments. The amount borrowed, along with any accumulated interest, is only repaid when certain life events trigger repayment. This flexibility makes reverse mortgages appealing, but it also raises questions about what happens down the line. What triggers repayment of a reverse mortgage? When does the moment arrive when repayment becomes unavoidable? This is a vital question that every homeowner considering a reverse mortgage should address. The repayment of a reverse mortgage is triggered by specific events, such as when the last borrower on the loan passes away, when the home is sold, or when you permanently move out of the property, for instance, if you relocate to a long-term care facility. Each of these scenarios sets the wheels in motion for the repayment process. The exact timing of repayment may seem distant, but understanding it now can prevent future surprises. Once repayment is triggered, the full loan balance, comprising the borrowed amount and accumulated interest, becomes due. This is typically addressed through the sale of the home, but alternatives may also be available. It's important to recognize that these triggers are designed to balance the needs of the homeowner and the lender. They provide clarity and ensure that reverse mortgages remain a sustainable financial solution. Being proactive about understanding these conditions can empower you and your family to manage repayment without unnecessary stress. Who handles the repayment? When repayment is triggered, what actually happens to your home? The reassuring answer is that your home remains in your name throughout the reverse mortgage period. Ownership stays with you, providing stability and control. But when it's time to settle the loan, your estate or family members typically step in to handle the repayment process. In practical terms, this means the executor of your estate or your family will arrange to sell the home. The sale proceeds are then used to repay the loan balance, including any accumulated interest and associated fees. After the debt is cleared, any remaining equity is passed on to your heirs or estate. This process ensures that your loved ones are not left with unnecessary financial burdens. Can your family keep the home? Will your loved ones have to part with a home filled with cherished memories? Not necessarily. If your family wants to keep the property, there are options available. They can repay the reverse mortgage balance using other funds such as savings, a new mortgage, or refinancing. The lender doesn't require the home to be sold. They only mean the loan to be repaid in full. This flexibility is a significant advantage for families with an emotional connection to the property. It allows them to make choices that align with their personal and financial goals. Moreover, it underscores the importance of discussing these possibilities in advance. Preparing your family for this scenario ensures they understand the steps they can take to retain the home if that's what they wish to do. By planning ahead, you can preserve the sentimental value of your home while still benefiting from the financial security a reverse mortgage provides. It's a delicate balance, but one that can be achieved with thoughtful preparation and communication. What about debt inheritance? Does the idea of leaving behind a financial burden worry you? Rest assured, this is not a concern with reverse mortgages in Canada. Thanks to the no negative equity guarantee provided by federally regulated lenders like Home Equity Bank, your family will never inherit debt from your reverse mortgage. Even if the loan balance exceeds the home's market value, your estate will not be required to make up the difference. This guarantee offers significant peace of mind. It ensures that your financial decisions today won't create hardships for your loved ones tomorrow. As long as the home is well maintained and property taxes are kept up to date, your estate's liability is limited to the home's fair market value at the time of sale. This safeguard reflects the thoughtful design of reverse mortgages in Canada. It's not just about financial flexibility for the borrower, it's also about protecting families from unforeseen financial challenges. Understanding this feature can help you make informed decisions with confidence. Will there be any equity left? How much of your home's value will remain for your heirs? This is a common concern among reverse mortgage borrowers. While it's true that the loan balance grows over time due to accumulated interest, many homeowners still retain a substantial portion of their home's equity. For example, let's say you borrow $250,000 through a reverse mortgage. Over 10 years, the interest adds up to approximately $150,000, bringing the total loan balance to $400,000. If your home's value rises to $750,000 during that time, your estate retains $350,000 in equity. This scenario highlights the importance of rising property values in preserving your estate's overall wealth. It's a dynamic that often works in favor of reverse mortgage borrowers. However, individual circumstances can vary, so it's always a good idea to consult with a financial advisor to understand how these factors apply to your situation. By choosing a reverse mortgage carefully and keeping an eye on market trends, you can maximize the financial benefits for yourself and your family. It's a strategy that requires thoughtfulness and planning but can yield meaningful rewards. Preparing your family for the future. How can you ensure that your family is ready for what lies ahead? Open communication is the cornerstone of effective financial planning. Sharing your decision to take out a reverse mortgage with your loved ones helps them understand what to expect. Explain how the repayment process works and make your intentions for the property clear. Whether you plan to sell the home, stay in it indefinitely, or pass it on to your heirs, transparency is key. Updating your will and estate plan is another critical step. These documents provide a roadmap for your family to follow when the time comes. Include contact information for your mortgage advisor to ensure that your loved ones have access to expert guidance. The more prepared they are, the smoother the transition will be. By involving your family in these discussions now, you can create a sense of clarity and security. It's a way to show your loved ones that you thought carefully about their future, ensuring that they are equipped to navigate any challenges that may arise. Does a reverse mortgage align with your long-term goals? When used wisely, a reverse mortgage can provide financial freedom during retirement while safeguarding your family's future. It allows you to enjoy the wealth you've built in your home without compromising your loved one's financial security. When the time comes to repay, the home's value will cover the loan balance, leaving any remaining equity to your heirs. With careful planning and open communication, you can enjoy a comfortable retirement while ensuring your legacy remains intact. Are you curious how a reverse mortgage could fit into your long-term plans? Book a free consultation with a Legacy Unlocked advisor today. We're here to provide clarity and guidance every step of the way. Thank you for watching. Don't forget to like, share, and subscribe to our channel for more insightful videos on retirement planning and financial opportunities. Share your thoughts in the comments below and stay tuned as we uncover more secrets to securing your financial future.